welcome to the week ahead from ICM.com. So first, as usual, we're going to start by talking about the key movers that affected the market during the past week. We're going to highlight the key events for this week and talk about the US elections, and finally go over the MetaTrader 4 platform and discuss some forming price patterns. So this week it's very busy in the markets. We have tomorrow the US elections. Also ahead of US elections, we have the Reserve Bank of Australia monetary policy meeting. So we have 3 central banks meeting this week: the RBA, Reserve Bank of Australia, Bank of England, and the Federal Reserve on Thursday. Tomorrow also we have US elections, and on Friday we have the jobs report from the United States. So all these events are definitely going to impact the market. So we're just going to try to dissect each one alone and try to get the best out of the market movement. So first, let's go with the key movers. Continues COVID-19 second wave, and its impact on the economic recovery continues to be number one factor on the market, especially after the heavy sell-off that we witnessed in equity markets during the past couple of days, following announcements of lockdown measures, especially in European countries. The United Kingdom announced on Saturday a full lockdown for a month, and also ahead of UK's announcement, we had some announcements also from Germany and France, which also affected the euro and mainly European equity indices. So central banks are now just like falling into a certain rule or a decision. So they either have to respond sharply ahead of waiting for some economic data, or they have just to wait for the data to come out to check how bad is it for the economy, and then they have to work. On Thursday we had the ECB meeting, and Lagarde discussed this. So I'm going to talk about this when we reach the European Central Bank monetary policy meeting. So as long as COVID-19 is still prevailing and it's still affecting the economic activity, and it's still weighing on the outlook of the global economic activity, definitely we're going to have impact in the market. Stocks, currencies, bonds, commodities, they'll all be affected. We saw oil dropping sharply last week. Also, since investors are afraid that the current lockdowns applied in Europe, they're going to affect definitely the oil demand levels, and this will trigger also additional decisions or additional cuts from the top oil producers, and this could take some time to reach. So this is the first mover, and this is definitely going to continue with us as long as there is no valid vaccine to use. Strong U.S. economic data. We witnessed a series of economic data from the United States showing that the U.S. economic recovery is stronger than rivals, especially than the ones in Europe, especially following the GDP, the gross domestic product, the first reading of the third quarter GDP, which came in much better than expected at 33.1% versus expectation of 31.9% only. This was a bit optimistic and bullish for the markets, but still it failed to give a proper pullback or a proper rebound for the market, as we are looking now to what could happen in the fourth quarter, and we started seeing some forecast cuts or some expectations cuts for the fourth quarter GDP. Bank of Canada monetary policy meeting, the bank didn't announce anything new, kept policy unchanged. However, similar to what the Fed is looking for, they will just target a certain rate for inflation, and they expect inflation to remain well below 2% until 2022. This means that the bank could be adopting its ultra-loose monetary policy for a longer term. Bank of Japan monetary policy meeting, also nothing was changed in the policy settings. Still everything remained on hold. The European Central Bank monetary policy meeting, a lot of people expected a certain change in policy, maybe additional asset purchases, but this wasn't the case. The bank only paved the way for a move in December. Christine Lagarde was so straightforward. She just said that we worked for the first wave. We tried to do whatever we can to reduce the impact of the first wave on the economy, and tried also to go on with a solid economic recovery. And this is what we're gonna do for the second wave. We're gonna face it. We're gonna take the needed measures in order to ensure that the economy is on track and we ensure a proper recovery. So this affected the market, but still, it gave some hope for investors that the ECB will continue to do whatever it takes to support the economy, but still this wasn't solid since the measures will be taken in December, unless we see something in the market that's more catastrophic, similar to the sell-off that took place back in March, and this could trigger maybe emergency meeting or measures to be adopted ahead of the next policy meeting. The Eurozone upbeat GDP figure, also we saw this on Friday following the ECB meeting. So it was also surprisingly positive for both the Eurozone in general and also the German GDP. They both came well above estimates, and this also gave some hope for investors that they were hoping for some bullish momentum or some risk-on sentiment in the market. So now let's move to the US elections, which is the number one event everyone is waiting for, who could be the next president for the United States. However, this could take some time since now, due to COVID, many of the citizens are voting in mail, and this could take some time to count the votes. Now, among the top swing states for this year's election, Florida, Arizona, Pennsylvania, North Carolina, Michigan, and Wisconsin. So these are mainly the key swing states for the coming for this election. Swing states, there are the states that they don't lean for one of the political parties, so they could be won by any of the parties. So they're not like just the safe states that we know about, similar to California, for example. So these states, they could decide who will win the next elections. And these states, they account for 101 electoral votes out of 538. So this is also not a little number. They can change a lot in the results of the elections. And both candidates, they know this, and they are currently doing all they can. They are campaigning as much as they can in these states in order to try to get as much votes as they can in order to secure their position. Now, by talking about the polls, most of the polls are showing that Biden is going for victory. Maybe some believe that these polls are a bit rigged, but still, if we apply certain factor to reduce maybe the changes for these polls, if you just have a certain factor to adjust these polls, still Biden is winning with a certain number. So this is just what the market is trying to price in. However, there is nothing solid, since back then in 2016 also Hillary Clinton was winning the polls, and they were suggesting that she's gonna win, and also she got like 3 million votes more than Donald Trump, but still there weren't enough for her to win the electoral votes and to be the United States president. So that's why we can't just rely on the current polls to decide who's going to win the elections. We're going to wait till the results come out. How will the election outcome? How the election outcome will impact stocks and the dollar? So we witnessed during the last debate a lot of talk about, for example, the tax plan for Biden. He's going for a certain tax that could, for example, hurt corporates on the long run, since he's willing to raise corporate tax, opposite to what Trump has done. However, with coronavirus still in focus, I believe that both presidents will have to ensure, or will have to go for a fiscal stimulus plan, a massive fiscal stimulus plan, in order to support the U.S. economy, in order to avoid any disruption to the current economic activity as coronavirus cases continue to soar. So this is going to impact the market for a while. On the long term, definitely the tax plan that each president has to follow, or his relations with, or his ties with China, for example, they have to weigh on the market. This is gonna take some time to be priced in the market. But during the short run, definitely following the elections, we have to watch out for any headlines concerning the fiscal stimulus, since they are the ones that will impact the market, since everyone is waiting for support for the market, waiting for a certain package that's enough to boost the economic activity and put it back on track and sustain the current economic recovery. According to, in respect to, or in regard to dollar, definitely when we know that that there are fiscal and monetary stimulus coming in all the time. For example, the Federal Reserve is doing whatever it takes to support the economy. They're trying to buy as much asset as they can. They're dumping money in the market. They're adding money supply. They're having low interest rates, and they suggest that these interest rates would remain low till at least 2023. So this is definitely going to impact the dollar, irrelative on what the president has in plans. So in order to assess how the dollar is gonna react in the future, it's a bit tough, since you have to also monitor what other central banks are doing. Since when you're pricing the dollar, you're pricing it relative to other currencies. And other central banks are also going for monetary stimulus, monetary easing, and also other governments, they are trying to apply or ensure certain fiscal stimulus. So this is just going to be a bit gloomy. A lot of investors, a lot of analysts, they're just waiting for who's going to win in order to see the major trend or the mega trend for the market. But we have also other factor that's affecting the market on the long run, which is the COVID-19 resurgence that we're just witnessing now. So this is for the US elections. Maybe for stocks, if you want to focus on stocks, for example, Biden's win is better for green stocks, since he has certain plan, for example, to weigh on to use green energy and stop fossil fuels. So this is just, in particular, it could support certain sectors. So this is what you can, for example, bet on for Biden's win. So this is mainly a quick summary about the elections and what to wait for from the elections. What I have to remind you that with such events, you'll witness a lot of volatility in the market. You have to make sure that you always apply your risk management techniques. You have to abide by certain risk management laws in order to ensure that you can sustain the activity and avoid being in sharp losses or in losing trades. So this is what I have to tell you about the US elections. Now let's move forward to continue what's on the economic calendar for the rest of the week. We start with the RBA, the Reserve Bank of Australia monetary policy meeting, the interest rate decision tonight or tomorrow morning. There are clear expectations that the bank could lower its interest rate from 0.25 to 0.1%. What suggested this cut, or what raised the chances for this cut, was the comments of the RBA governor earlier in October. He suggested that the economy could be needing further stimulus. Also, the minutes of the last monetary policy meeting also suggested further support for the economy by taking certain monetary easing steps. So this is what raised the chances for a rate cut in the coming meeting to 0.1% from 0.25%. Also, the US presidential election is taking place tomorrow. We have factory orders from the United States for the month of September, which is expected to show a rise by 1% versus 0.7%. And then we have the weekly crude oil stock by the American Petroleum Institute. And moving to New Zealand, employment change is expected to show that the employment dropped by 0.8% during the third quarter. And we have also the Bank of Japan monetary policy meeting minutes. Moving to Wednesday, we start earlier also with retail sales from Australia, expected to show a drop or a contraction in retail sales by 1.5% in September. Then we have the services PMI from the Eurozone and the United Kingdom, expected to remain unchanged, similar to the preliminary reading. However, we could see some surprise like the one that we saw today in the manufacturing PMI in both Eurozone and the United Kingdom. Also, an early prediction for the jobs figures, the ADP non-farm employment change, expectations of 650,000 reading versus 749 during the past one, and the ICM non-manufacturing PMI for October expected to drop to 57.5 from 57.8. And also we have the weekly crude oil inventories by the US Energy Information Administration for the day. Moving to Thursday, we start with from Germany with the German factory orders. In September, expectations of an expansion by 2%. Moving to the United Kingdom, construction PMI at 55, dropping from 56.8. Retail sales also from the Eurozone expected to show contraction or drop by 1% in September versus an expansion of 4.4% in August. So see here, this is just a small hint for how the economic activity dropped in September relative to what we were witnessing in August. We have also, it's an important day on Thursday since we have two central banks meetings, the Bank of England interest rate decision. There is a high expectation also that the Bank of England could add the QEO total, so the asset purchase program, it could be expanded, especially that London or the United Kingdom is going for a lockdown, which would definitely hurt the economic activity. And also, let's not forget the Brexit, the Brexit issue. We still didn't get a deal or a Brexit trade deal between the European Union and the United Kingdom, and this is definitely going to affect the market on the long run if we're going to go without, if the United Kingdom is going to exit without a trade deal. Also from the United States, initial jobless claims to drop 733,000 versus 751,000. A Fed interest rate decision. There's nothing expected for the Fed currently, but also the Fed could be highlighting the rising risks or the rising downside risks for the economy from the second coronavirus wave. So this is for Thursday. Moving to Friday, also it's a bit busy on the calendar. We start with the RBA monetary policy statement. Moving to the Eurozone, German industrial production to show expansion to 0.7% in September. And we have the jobs reports from Canada and the United States. So in the United States, the average hourly earnings expected to show a surge by 0.2% in October. The US economy to have created 600,000 jobs and the unemployment rate dropping to 7.6 from 7.9. These are the expectations. And from Canada, employment change to drop by 7.5 thousand, while unemployment rate to remain steady at 9%. So these are the top economic events and releases to come out during this week. Now I'm just going to move to the MetaTrader 4 platform to try to highlight some of the forming patterns. So let's start with the euro dollar, which was dropping for the past couple of days, and now we're seeing a bit of a recovery or a pullback in the market. So we're just going to go for the daily chart. Now we can see that we found a bit of support near the previous low that was reached in September, on the 25th of September. So it's near 116 level. This area is a key area for the euro. So in case we break this area, we definitely have to look for additional support near the previous resistance zones, which turned to be support near 1490. We have the first one. So this is also a key level to watch out for in case we drop below 1680. If we're just going to continue to the upside here and the bulls are going to gain some momentum, we definitely need to close above 117, 116.80, which was also a key support previously that could turn to be a certain resistance. So these are the key levels if you want to trade the euro against the United States dollar. So on the upside, we have a resistance near 1690, 117 level, and then 118.30, and on the downside you have 116, it's a key level, 115.90, 116.10. This area is a key support area, and then 14.90. We're just going to add some of the technical indicators before going to smaller time frames. So you can see also here this support zone is almost coinciding with the 100-day exponential moving average. The RSI is a bit higher than the previous time we're trading here, almost 37. We just go to smaller time frames. You can see that on the hourly chart we're a bit far from the moving average to 100 and 200, and the Bollinger Bands, they're just converging and closing into each other, showing that we lost some momentum or volatility during the past couple of hours, and the market is a bit of is somehow consolidating in a certain range. If we want to just be more bullish on the pair or wait for certain breakouts, definitely we need to clear above this trend line, which is combining the previous stops registered or logged during this move to the downside. So we need definitely to break above this trend line and then to also move above 117 in order for bulls to gain some support. So this is for the euro dollar. Moving to the British pound. So this move here, first let's go to the weekly chart. You can see here for the past couple of weeks where we were trading almost inside a certain range. You can see how the bodies of the candles, we have a candle up and then the second candle, it's fully engulfing to the other direction. So we've been like this for the past 4 weeks, and this just suggests further uncertainty. And definitely we're seeing this due to what's happening on the Brexit. That was a key mover earlier, and now with coronavirus coming in. So if you can see this area here, or these trading weeks, they were almost of the same format. We had a week up, week down, week up, and then another week up here on some bullishness over trade talks, and then here now we're back again to 1 week down, 1 week up. So how this is going to end with the Bank of England coming in this week is just a bit of a piece of information to watch out for. If we go to the daily chart, you can see that we found support near the previous support area near the 128 level, 128.40. So you can see here how many times we found support and the market rebounded, and currently this support is still holding. If we're just going to look for further support zones, definitely we need to highlight the previous low near 77.60 and then the 26.75 low. So these are the key levels on the downside that you could expect some support from or a buying pressure. On the upside, definitely 130 remains a key psychological level, especially that it turned out to show how important it was for the market. So here when we were trading above the 130, the market continued, and then we were trading lower, and when the market crossed below 130, we witnessed further lows towards 128.50. So this is clear that 130 is a key level. If we just have a closer look on this, on the formation that we're just working on, we're trading inside the certain channel that we highlighted also during last week. So you can see here how the market is moving perfectly inside this channel. So in order to have some bullish momentum, some positive move on the pound, we have to clear above the falling trend line that's combining the previous stops. So any trade back above the trend line could be positive, and could be also ensured by another trade above 130 psychological levels. So these are the key levels if you are trading the British pound against the United States dollar. Above 130 psychological level, you have to keep in mind the 130.80 as also an important area for resistance. By adding these technical indicators, you can see here that the 100 and 200-day exponential moving average, they're also coinciding with the previous zone of support. So this is just the area between the 100 and 200-day exponential moving average could provide some support for an extended period of time. Moving to the dollar yen, which was having a bit of a rebound today, rebounded to almost 104.90, and now we're back to 104.60. I'm just gonna remove. So until now, we failed. The 104 area continued to show that it's a key area for traders, and buyers were still holding near this area. However, we're failing to post higher highs. So if you can just see, we have almost similar low or a bit of a lower low, but still we're having series of lower highs. This is high, and then you can see how the lower highs are falling. So if you just draw this trend line here, you can see how we're having a downtrend, but still the 104 area it's holding. So in order to have some bullishness on the pair, we need to clear above this trend line and then to move above the 106 level, which was almost the previous resistance here, 106.20, and after that we can start looking for another retest of 108.10. So the US elections could be, if we witness some volatility on the US elections, especially since the results could take some time to come out, we could see some volatility maybe on currency pairs, and this could be one of the levels on the upside to watch out for. While on the downside, remains 101 continues to be one of the key levels on the downside, definitely following 104, which acted as key support since July. So these are the key levels if you are trading the dollar against the Japanese yen. Moving to the dollar against the Swiss franc, we just go to the weekly chart. We can see how we formed a bullish engulfing candle on the weekly chart, and the market is moving higher. So watch out for this candlestick pattern. Definitely, you have to pinpoint the 93 level, which was a key reversal point back then, almost in September. So this is for the dollar against the Swiss franc. And now, if you can see, we are trading currently near the previous support. So here we have the key support in January 2018, and also in December, February, almost this area. So early 2019, we had key support here, and now we're trading almost at this level. So you can see how it acted as key resistance here, and then we have this break, but failed to continue to trade above it for more than a week, since the market traded 1 week up. The second week it erased all the gains, and now this 191.80 is proving pivotal. Moving to the daily chart, you can see also how important it is on the smaller time frames. You can see here the 91.80, 91.60, how it was a key resistance area previously. So any trade above 91.80 could pave the way towards 93 psychological level. And on the downside, any reversal or any failure, I'm just going to highlight this now on the hourly chart, could lead to a retest towards the 90.40 or the 90 psychological level. So I'm just going to go for the hourly chart. You can see also that we have a series of higher highs. So definitely we need to watch out any break below these trend lines. So we have this trend line that's combining the previous tops, and also we have another trend line that's combining these lows here. So you can see a steep trend line, but a steeper trend line also, another one. So watch out for how the market would react with these two trend lines. The Australian dollars, everyone is waiting now for the RBA measures. So it's a bit priced in the market. We witnessed a certain drop for the past couple of days, and now we're having a little bit of a rebound. So this area here between 69, 70 and 70 psychological level proved to be a key support area for a while. So any more dovish tone from the RBA could weigh additionally on the Australian dollar. So we'll keep in mind this area as a key level, and then we have the 69.40 almost, which was also key supported during this range of trading here, 69.20, 69.40, ahead of the key level back then at 67.20. So these are the key levels for the Australian dollar on the downside. On the upside, definitely we need to clear back above 71.60 in order to gain back some momentum. But also let's not forget this trend line that's combining the previous stops. So any trade above this trend line with a clearance above 71.60 could add some bullishness to the pair, and maybe we could retest back the previous stops near almost 72.60. So these are the key levels if you're trading the Australian dollar against the United States dollar. I'm going to add the indicators, and you can see how the Australian dollar was finding support near certain moving averages. So here you can see how it found support exactly at the 200-day exponential moving average, which was coinciding with the previous supports, classical supports that we talked about. Also, if we go for the weekly chart, there's also something nice that you can look out for. Previously, the 100 and 200 week exponential moving average, when they convert, they provided key resistance here, and now they're almost converging, and they provided support for the first time, and now here for the second time. We just also go closer with the time frames to the hourly chart. You can see here how the 100-hour exponential moving average also gained certain resistance, and the market dropped almost 70 pips from the 100-hour exponential moving average, and now we're approaching it again. So this is for the AUD USD. Moving to the New Zealand dollar, almost same formation as the RBA, but still it's a bit more stronger, since the RBNZ is in a better situation than the RBA. But still, this area here that continues to show key support. We have this trend line combining the previous lows. So it's almost support area. It's between 65.60 almost and 64.80. This is just a support zone that's been holding for a while. And following this, we need to highlight 63.85. And on the upside, definitely we need to highlight the previous top and the recent set top. So the previous top near 68 level, and the recently set top, it was around 67.20. So almost we're inside the certain range between 65 and 67. I believe we're going to still continue to trade in certain range unless we have a major change in fundamentals that could drive bears or bulls in a certain direction on a clear directional trade. So this is for the New Zealand dollar. Moving to the USD CAD, which is also having a certain move on the daily chart. Now we're seeing a certain move to the downside. So you can see how the 200-day exponential moving average acted as key resistance first time, and now for the second time, it's also providing certain resistance for the market. We just have a closer look on smaller time frames. So here we had a similar formation here, a double top, or a formation that was series. We had a series of we have almost two tops, and we had also it was similar first to an head and shoulder formation with this shoulder and another shoulder, and this is the head. So this was the first impression for traders who are following the market, that this is a head and shoulder, and we have this as a neckline. But this wasn't the case, and now we almost have this double top formation, and the market is moving to the downside. We have this support zone that was near 32.80. It is a key level, so watch out how this will come and play. If we just have to highlight some key levels on the downside, the market is going to go down. Definitely we need to, just going to remove these to make it clearer for you. So if we just remove everything from the chart, you can see that now we're on a key level, 32.60, which was a key level earlier. So now we're trading back at it. Any trade back above 32.80 could be more bullish to the pair, and maybe we could retest 33.70 area. However, if we continue to the downside, the first target is almost near 32.20, and then we could fall to retest the trend line that's combining the previous stops. So this is for the Canadian dollar. Moving to gold, which is also being a bit strong on the day. So following last week's decline, we found support exactly near the first low, which was almost 1860. So almost we had the same drop to a certain low. So this area here between 1845 and 1860 is acting as key support for gold buyers. And also we have this trend line here that's been combining the previous stops, and traders are looking for a break above it in order to have a bit more bullish momentum on gold. So this is just what you have to look out for, the trend line and 1930 resistance area, which provided some serious resistance for the market for 2 days. So these are the levels that you have to watch out for if you are trading gold. Also, if we go for we add the technical indicators, we can see here how the RSI is also being capped by this trend line. So if you just compose this trend line, so this trend line here, if you just draw it the same on the RSI, you can see here that the same almost formation on the RSI except for this drop here. So you can see you can get your confirmation from a break above this RSI line if it comes before the break of the upper trend line. So this is for gold. What you need to know about gold. Moving to silver, almost having same formation, similar as gold. We're just on the smaller time frames. We're having a smaller trend line that we just traded above. In terms of Bollinger Bands closing, the bands are closing, and since we're losing momentum during the past couple of days, even the weeks, we're trading inside a certain range, a tight range between 25 and almost 22, 22.50, 22.80 per ounce. So this is just a certain consolidation that you can highlight and trade the breakout of this consolidation. So 25.40 and 22.60, $3 range that we're trading in, where the selections could be a key mover for this for a breakout from this range. Moving to Bitcoin, was everyone's interest during the past couple of days, especially following the surge to 13,000. We're almost trading inside a certain consolidation as we're lacking a certain driver. So you can see here how the market is. If you can just draw the previous stops, so you can see that we're having higher highs, higher lows, but still almost the range between these lows, it's a bit different. So we're almost finding support near the same area almost. So watch out for any break below this rising trend line. If we move to Dow Jones, which is also having a bit of a recovery during the day. So if we go to the daily chart first, so this is the line that we found support previously at. Remember here we had almost a formation, a continuation formation, and the market traded higher, and then we traced exactly to this trend line, and then we had a little pullback again, almost 88% from this drop, and then here we retested this and was also a perfect buying position or buying spot for traders. So the retest of this trend line. So this will have to make you have to make this as a key level for you, 26 level, which is almost also, if we break below it back again, it's also the break of this trend line. And following this move, we can witness a dive or a faster drop towards 24,800, 24,400. So this area here could provide support if we're going to witness some sharp selling in the coming days for on the Dow Jones. While on the upside, we just got to have a closer look. If we just add the indicators here, you can see how the market, here we had a series of so if you just combine these previous bottoms on the RSI, you can see one bottom, 1, 2, and now the third bottom was exactly a certain reversal. Following this bottom, we had triple divergences. So you can see here 1, 2, and 3 bottoms, and we had a higher RSI in the first one, second one, and the third one. So we had a triple divergence, and following this triple divergence and the break of the interim resistance line, we were able to rally almost 400 points to the upside to touch the upper band of the Bollinger Band, and now the market is resting there. So you can see how these classical technical lines, they're just they can also give you certain a certain prediction on where the market could be going. Also here you can, ahead of the break, we had almost a certain formation here, which was almost similar to a wedge, but now we traded back above it. So watch out. In terms of levels on the upside, we highlighted the levels on the downside. In terms of any retracement back to the upside, in order to get further clearance for the move, we definitely need to, so we go for the H4 chart. So we highlighted these levels, 6,070 and 25,416, and this area here. So it's just this is the second one. It's a bit close to the current level, almost 600 points. And then we have these levels here as key support area, or the final line maybe for support ahead of a further sell-off. So these are the key lines on the downside. While on the upside, we need to definitely trade back above 27,130, and then also the previous stop near 27,600. Any movement back above these two key levels with a bit of more optimism in the market could lead to a retest, maybe to these previous stops, or at least to the trend line combining these previous stops, and then we could be poised for another move higher, or maybe towards a higher high. So this will depend on the volatility that will come out from the US elections, or what would happen with the elections. It's hard to tell what could happen following the elections, but these are the key levels that you can watch out for in order to base your trades at. Moving to the WTI, which was also moving sharply to the downside in the past couple of days amid growing woes over the impact of COVID-19, the second wave over oil demand. But on the bigger picture, we're still trading inside a certain channel. We had a certain move here. We talked last week about this consolidation zone. Earlier, we had smaller consolidation zones, and the market was able to break back below it. So in order to turn more bullish on oil, we definitely need to clear back above 36.80, 37 level. And then following this, we could be poised to another move to the upside towards 39.40. But this should be driven by fundamental factors, some relief for investors over the outlook, or the oil demand outlook, or at least some confirmation from oil producers that they would be moving fast to cut production in case demand fell sharply due to the current restrictions taken in Europe. And on the downside, these are the key levels. On the upside, if you're just going to highlight them, if you're going to go for the downside, what are the levels that you have to watch out for? You can just add the previous support, which was also a key level on the retracement to the way up, which is almost near 31.10. So these are the key levels if you are trading oil. You better watch out for how the market will react with these levels. This is all for today's session. If you have any questions, please write them down. I'd just like to remind you that all the information, news, analysis, and opinions mentioned in this webinar only serve for educational purposes and shouldn't be taken as a signal whether to buy or to sell any financial instrument, and ICM doesn't provide any investment advice. Okay, so there's someone asking for analysis for the Euro-Yen. I'm just going to go back to the platform and try to. So since also you can. So also you know that the Japanese yen wasn't moving much recently, and it was you can see that from the dollar yen. But what was moving was the euro against the United States dollar. So this can also hint that the euro yen is almost facing the same formation that the euro dollar is facing. So this is what you can see on the daily chart, that we had a certain high and then the market moved lower within. If we just need to have a certain just key levels to watch out for if you're trading dollar yen, definitely we have to watch out for the 119 level, which is slightly above the 120 psychological, but this level was key support at a certain area. In order to move back higher, or to have at least a bit of a positive momentum on the euro yen, we need to move at least back above 124.30. So this is on the bigger picture. If we just gonna have to move to the smaller picture, or highlight what's happening on the smaller area, you can see here how this movement to the downside, it's clear that we're having a downtrend movement. So at least we need to clear above this trend line. This also could give us the first signal for a possible reverse. So we're talking about level between 123.40 and 124.30. So this is on the upside if we're just looking for a key reversal in the current trend that we're facing. Since we had the key mega strong trend to the upside, now we're having a certain consolidation and movement to the downside. If we just move to the hourly chart, we can see that the market here was oversold since the market since we had the fast move to the downside. Also the RSI would signal this. We had a certain clouding on the RSI. The market was moving below 30 for a while. We had triple divergences here, but the market failed to retreat to the upside. So you can see here almost we have a similar RSI, but here the RSI was different than the first. So we can highlight these. So this area 2 and 3, and we had these certain lows. So if we just gonna draw these here, we had a certain low, but the market failed to. So this is almost similar to the formation that we just showed on the Dow Jones, but the market is failing to react positively. And now we're trading inside a certain consolidation that the Bollinger Band is also confirming. So what you can do, you can just highlight the current consolidation zone that we're trading in. Also here, you can draw this trend line which shows that we're trading inside this consolidation that started like this. So we have this move. So you can see here we're almost combining or forming a descending triangle. This is how the descending triangle looks like. So we have a certain triangle, and then the market continues within a certain direction. But definitely this will have to rely on certain fundamentals. And let's not forget that we're just having too much factors that are affecting the market, and central banks could be acting further to support the economies. But on the bigger picture, what could weigh on the pair if the market's going to suffer more from the COVID-19 resurgence, and investors are going to rush towards safer currencies and dump riskier currencies such as the euro, so they will be buying yen and dumping euros. So this could lead to further losses and further move to the downside. So here what you have to assess if the market moved lower again. So these are the key levels. If you just trading on the bigger picture, on the smaller picture, 120, 160 on the downside, any drop could lead to a bigger move, maybe towards 119, 119.50. And on the downside, on the opposite, for a reversal or for a bullish momentum, we need to at least trade back above this falling trend line and also move above 122.45 to at least form maybe a reversal pattern here that could be supported by a break back above 122.46, and there we can have a bit more bullishness on the pair. So this is what I have to say about the euro against the Japanese yen. You are most welcome. Any further questions? Feel free to ask any questions that you feel like you have doubt, anything that you're doubting regarding the elections tomorrow, so we can help. And also tomorrow we're going to have a live session on YouTube at 11 GMT in order to also have a look on what's happening on the day. Okay, perfect. I believe this is it for today. Thank you all for watching, and have a great trading this week. And make sure to always respect your risk management rules, especially with the expected volatility.